Good morning. How is everyone doing? Good to be back again. Hey Via XP, how you doing? Good afternoon. Hey BL. Hey Ayakame. Via XP knows the drill. Thanks for that. Sounds good. Thank you. Hey Diana, good morning. How you doing? So, quick risk disclaimer, this live market analysis is sponsored by Max Global Markets, a brokerage firm that is registered with and regulated by the Monetary Authority of Singapore, the MAS. Max Global Markets has no control over or influence over the contents of this analysis, which was generated by an independent party. So please remember that the information on this analysis is offered solely for educational and informational reasons and does not constitute financial advice. All right, so quick short disclaimer. Let me know. Good morning, Jen B. How you doing? I guess you guys can see me okay. You can hear me all right. The sound is not dropping. If you are new to the session, if you're watching and you're new to the session, do drop a message and say hi. Let me know that you're here. Let me know where you're joining us from. And also the link for the Discord channel is there. If you haven't already, I don't know what you're waiting for, but if you haven't already, do make sure you click and join us on Discord. That's where a lot of guys and girls are sharing very good trade setups, discussions, analysis. You don't have to trade alone, you can trade together in the community. Thanks for that, D-Train. Tweaked a couple of things. Let's hope it stays that way. Hey, Jimmy, how you doing? We'll give it a couple of minutes. I'll give it a minute before we get going. You'll be looking at my Forex Factory. I'll do a quick review of what has happened since the last time we spoke on Thursday. We'll go through a little bit of that, and then we'll look into what's coming up for today and also into the week. A little bit of a adjustment that I'm doing for tomorrow, so just stay tuned for that. But I'll let you know what's the plan for tomorrow, okay? Good morning, Goju. How are you doing? One more minute. We shall get going. If you haven't already, and if you'd like to check out the Max Global Market, you can click on you can scan that QR code on the corner there and register for an account and try it out. Okay, so let's get started. Again, if you do have any questions at any point in time, please feel free to put it into the chat and let me know. Thursday last week, on the 12th of October, since the last time we spoke, we had the US CPI data being released. And it was 3.7%. It was expected to drop slightly to 3.6%. But CPI year on year for the US stayed at that 3.7%, right? So no change on CPI for the US, no change on inflation growth for the US. It stayed at 3.7%. Month to month increased, it dropped from 0.6 to 0.4. Not as much as expected by that 0.3, so it's at 0.4. Okay, so core CPI stayed at 0.3%. What this all means is that inflation is still looking like it's showing that, I was going to say that it shows that it's dropping. It's not dropping, it's staying at 3.7 on a year-to-year basis, but it's not increasing. The good thing is that it's not increasing, all right? It's staying at 3.7%. If you look into the inflation breakdown, scroll up from here, you see that essentially the Fed Reserve is aiming for 2%, which we know. There was a line there. Price pressures seem poised to continue, right? Gradual easing in coming months, right? So we're still expecting Inflation currently at 3.7%, but we're expecting it to slow down further, right? Inflation growth to slow down. The main thing that's keeping it up, is where is it? Gas prices, right? Gas prices up 2.1% in September on a monthly basis, major contributor to inflation last month. That's one reason why we see it at 3.7, not at that 3.6% number. It looks like, as I was telling you all last week, we might see it come back up slightly because of what's happening in the Middle East, the conflict happening there. But with that factored in, I think we're still looking at inflation growth slowing down for the US. And that's actually leading to the idea that in November, on the 1st of November, the Fed Reserve is very unlikely to hike rates further. We're at a 90.1% chance of it staying at the current rate. In fact, on the 13th of October, you see here at the bottom, on the 13th of October, one day after the release of the CPI data, it was as high as 93.8%, right? Almost a certainty that the Fed Reserve was going to keep rates on hold at 93.8, right now at 90.1%. So what happened? With that data release on CPI, with that CPI data release, this was the US dollar sitting at that support level of 105.70, along 105.70. 3.7, we saw the dollar strengthen back up, right? We saw the dollar push off 105.70, and within the hour up to 106, 2 hours and a couple of hours. By the end of Friday, end of last week, we saw the dollar index. Yeah, that's right. By the end of last week, right, on Friday, we saw the dollar index at that 106.80 level. Right, we saw it at 106.80 level. On Monday, started retracing back down, tested at 50% fib retracement level before bouncing back up. Today, now looking like it's finding or looking for that little bit of directional, is retracing a little bit. We're going to see what's going to happen from this point. All right, 106.80 also comes very close to that overall, that longer term move to the downside, 61.8 right there. Move this up to this point here. Right, you can see it came right up to 61.8, tried to break above, consolidated before pushing right back down again. So that's what happened last week on Thursday with the CPI data from the US at 3.7, showing some level of stability, still slightly above the Fed Reserve's target of 2%, but it's showing potential of hitting that 2% target. So 3.7, we saw the dollar strengthen. Firstly, most likely is a move towards reserve, right? It's most likely a move towards reserve, and also showing that although the chance of a rate hike is diminishing, almost 90% certainty that it's going to hold at the current levels, we're looking at some stability on the US dollar as well. Okay, so that's why we see from that data on Thursday last week. Through to Friday, nothing much else. We had Chinese CPI data at 0%, was 0.1, expected 0.2. It slowed down to 0. That's a year on year. And then not much else. Consumer sentiment for the US, 68.1, was revised from 67.7 down to 63. Okay, down to 63. And you'll see that this was on Friday at 10 p.m. And that's why on Friday at 10, right, although we see it push up, it stayed at that level, held by that 61.8, failed to break higher. We had a good of a high level there at almost 107 before it started tracking back down again. Take those away. Then on to Monday, right? We had the New Zealand parliamentary elections. Didn't do too much. Governor Bailey speaking at the panel discussions. Again, not too much. And then all through to Monday, where we had not a lot of news. Right? We didn't have a lot of news on Monday, which is why you saw prices retrace back down on Monday. Then we are here today on Tuesday. We had early this morning, 5:45 a.m., New Zealand with their CPI data quarter on quarter was 1.1%, got released at 1.8%. Okay, still showing that 1.8% data, still at that target level of 2% or slightly below that 2% level. So it's still reasonable. Aussie monetary policy meeting minutes came out a little bit mixed. You see pops higher on RBA minutes scattered with hawkish tinge, right? So a little bit hawkish on the Aussie RBA meeting minutes, and you see that the Aussie dollar actually popped to the upside, looking like it might continue higher. And then later tonight, 8:30 p.m. GMT plus 8, we got a whole bunch of data to be released. The Canadian CPI year on year. Median CPI year on year for the Canadians, 4.1, expected at 4. Trimmed CPI, 3.9, expected 3.8. It looks like CPI data for the Canadians might be, again, quite similar to the US that we saw last week, showing inflation growth slowing down. Right, we might see some strength come back into play for the Canadian dollar. That's going to be impacted. Also, Canadian dollar also going to be impacted by the oil prices and the conflict that's happening. So we might see that strength on the Canadian dollar come back into play, maybe to a little bit more of a further extent. And then same timing, we're also going to have the US retail sales number. A little bit surprising here is that it was a 0.6% retail sales month to month, expected to be released at a 0.3%. Core retail sales 0.6, expected 0.2. I'm looking at this, I'm a little bit surprised, a little bit concerned that I'm trying to figure out a reason why they're expecting retail sales numbers to slow down for the US. Doesn't seem like it should be. Although inflation is slowing down, so it doesn't seem a reason why we should see retail sales numbers slow down. With this, I'm possibly thinking that it might come out at a little bit higher than expected. Right? I'm looking at this thinking that it might come out a little bit higher than expected, which could mean that we'll see, if it does come out at maybe just trying to guess a number now. If this comes out at a 0.3 or 0.4, maybe a 0.4, 0.5 number for the retail sales, we might see that dollar strength come back into play. Okay, so I'm just looking at that retail sales number for the US. I am somewhat thinking that we might see a bit of a surprise to the upside there for the data release. Okay, so I think what we might see now is a little bit of a retracement on the dollar index, and then we could see it push back up because of if we do see a surprise on the retail sales data for the US. Okay, so we'll form that idea, we'll test that idea, we'll see how it takes us from there. Okay, hey Bjorn, how you doing? Hey Pips Apprentice, hey Lainey, hey Jobrack from Belgium, how you doing? The main, well, not the main thing, the other thing I want to tell you all about is also that tomorrow we do have the pound, the UK with their CPI data to be released. CPI year on year for the UK at 2 p.m. GMT plus 8. It was 6.7%. It's expected 6.6%. If we do see a release at 6.5, below 6.6, or even if we do see it at a 6.7, yeah, if we see it at 6.6 or 6.7, anything below a 6.7, that's likely to have a similar impact to what we saw on Thursday last week with the US dollar. I'm expecting increased volatility here for the UK CPI data year on year tomorrow. All right. So because of that, what I would love to do together with you all is to trade that news, because at 2 p.m. is just 1 hour before our session, our usual session. What I'll do tomorrow is I will be tuning on at 1. We'll move the daily analysis earlier. We'll start at 1:30 tomorrow. Okay, we'll start at 1:30 GMT plus 8 tomorrow. Half an hour, I'll do a prep. I'll cover the other currency pairs. At 2 p.m., we'll wait for this data release from the UK. Ideally, we'll look to trade that together through to 2:30, maybe even closer to 3 o'clock, and that would replace our daily analysis for tomorrow. So tomorrow's session is a daily market analysis and a live trading session, a special for you guys. Do make sure you tune in. This will be available on YouTube and also on TradingView. So everyone on TradingView, we will be doing an analysis session starting at 1:30 p.m. through to the 2 p.m. data release, and then it becomes a live trading session. Hopefully a live trading session that will enter a few trades and make some good pips and profits together. All right. So make sure you tune in for that. I'm looking forward to that. D Train says, wow, that will be an exciting day tomorrow. I am looking forward to it. I am looking forward to it. Okay, so with that, something to look forward for tomorrow, but what we have today, first off, is the Canadian CPI data to be released. Looking like we might see a slowdown, some strength on the Canadian dollar, and then the looking for a surprise for the US retail sales number for some upside on the dollar. All right. Okay, so with that, then we'll look at the charts. Diana says, nice one. Yep. Jen B says, a little bit too early for me. Well, you can tune into the replay for that, okay? Now, looking at the dollar index, currently at 106.33. We do have the 50% level right there where it bounced off early this morning. What I'm looking at or what I'm thinking is that could it test this level again? Okay, so if you look at this, we're thinking that we're going to see that dollar strength. We could see that dollar strength come back into play. I think the decision would be what happens, looking for this to retrace, and what happens at this 50% level or along that 106.20 level. Okay, so what I'm looking for here is today being the 17th. Currently at 106.33. Looking for it to test 106.20. Okay, dollar index, I'm looking for this to test 106.20. And you're actually looking at this. Why I'm hesitating, okay, why I'm hesitating is because I'm thinking of it coming down to this point here. And if it breaks that 50% level, 61.8 is not very far away. I think it could come down to this point. And I would actually look at that. Okay, so what I'm actually thinking now is that it could come down to this region. So I'm looking for it to 106. Test 106. Okay, I'm looking for the dollar index to come down to test 106. If it breaks below 106, it could get to that one's broken. I'll take that away. I'm happy with that. All right, and I'm considering that this whole point as an area now. Oops. So what I'm looking at is test 106. If it breaks down, we could see it test 105. No, I think it's going to come down here and push back up. Test 106. Look for bounce to 106.70 again. Okay, so what I'm looking for is whether the dollar index could do this. Test 106 and then bounce back up this way. If it breaks below 106, then we could see it test 105.60. However, I think that might be a little bit less likely if we see the retail sales number surprise to the upside. Okay, this is on good retail sales number. All right, and then if we're looking at it to break 106, could test 105.60 on bad retail sales number. But generally, I'm looking for that move. I'm looking for it to come back up to 106.70, maybe even 106.90. $106.90. All right, there we go. Okay, so overall right now, dollar index might see some weakness, but still looking for it to push back up. Then with that, looking at the Kiwi dollar, that did not trigger, we'll take that one away. We can take this whole thing away. You see this double top actually worked very well where it broke all the way down. That level I can take away. And right now, you'll see that it's very close to this support level here at 0.5860. It's 5895 right now, so it's about 35 pips away from that support area. You do have that level there. Okay, so take that one away. So I'm looking at this on the Kiwi dollar. If that dollar strength does come back into play, we're going to see this trade down towards that support. Check the H4 for the next level down, which would be here. $5,760. Back to the H1. Okay, so Kiwi dollar, it's coming to this area where I wouldn't do anything. Okay, it's coming down to this support area where we've seen it bounce once on the 4th of October. We've seen it bounce and gap up on the 14th last week. Now it's pushing back down again. I would say this is where you stay patient, and if it does break below 5860, so below 5850, 5845, stop loss no more than 20 pips, no more than 25 pips. Take profit, it could be down to 80 pips. So we're looking for it to track a bit lower to break that support level and head to the downside. Okay, so 5845, 25 to 80 on the Kiwi dollar. So we're looking for this to sell down 0.5845, stop loss 25, take profit 80 to the downside. Okay, there we have it. We're waiting for that to happen. Quite a bit of waiting to do for this one. I think that it's going to sit there for a little bit, just because remember that we're looking at the dollar possibly weaken down a little bit before pushing back up, possibly. So I'm looking for this might sit there a little bit, might bounce around, but it needs to break below that support before we can sell. Then onto the Aussie. So Aussie, we did well on this last week. Right, we had the good news scenario, bad news scenario, dollar strength, dollar weakness scenario. In this case, on Thursday, head and shoulders pattern with the neckline at that 0.64 level. It broke that and went straight down further than expected. So I was only catching that 61.8 level. But if you check that video, I think we were saying this is our first level. It could also go all the way down to that support level here. Okay, so Aussie dollar on a head and shoulder pattern worked very nicely, and that fib level is done. Take that away. Okay, right now pushing back up. You can see that it is forming a little bit of a channel to the upside. Right, it's forming a little bit of a channel to push towards the upside. I think that what I would be looking for here is, remember that dollar weakness, we should see this push the Aussie dollar back up. And if you catch this, it's right at that 50% level. That's why we see it. All right, I'll zoom in a little bit more. That's why we see it testing early this morning, trying to break, failing. Right now, consolidating. That 50% level is holding that Aussie dollar in that channel. Okay, so what we might see is maybe a push up towards that top of the channel, which would coincide with that 61.8. Or we might see it sit along this point, 6360. We might see it sit along this point, but I wouldn't be looking to buy the Aussie up. Right, I wouldn't be looking to buy the Aussie up. I'm looking for that push to the downside. Why it's pushing up? Remember that it was also because of that slightly hawkish monetary policy meeting minutes this morning. So might be pushing up. Areas to look out for would also be this point there. Okay, so what I would be looking for on the Aussie would be either to sell down below 6350, 6345, stop loss no more than 20 pips, take profit back down 60 pips to the downside, or if it pushes up to test that resistance, and then I'll look to sell down from there. So, or it will look like that. 6390, stop loss 6385, stop loss 20 pips, take profit. You could go all the way down almost 100 to the downside. Okay, so what this means is that we're either looking for it to bounce along here and then break down, or we're looking for it to push up, test, and reject back down again. And by the looks of this, okay, so this one, even if it pushes up that way, being held by 61.8, I would look to sell down only if it breaks that trend line. So I extend that trend line right out. And I'll say below 6345. We'll highlight this one, but this is a possibility as well. Okay, so 6345, 20 to 60 pips to the downside. So we're looking to sell this 6345, 20 to 60. 20 pips to 60 pips to the downside. Yeah, I think it's going to push up a little bit and do that. Okay. All good. Makes sense so far. Do help me out. Click that like and subscribe button if you haven't already. Okay. US yen has been a little bit uneventful, right? A little bit uneventful because I was looking for it to test along that level and push back down. Didn't happen, so we'll take that away for now. But what you see here is that, I think I said this the last time round, is also that you see that as much as the dollar yen seems to be pushing up, it's not pushing up very quickly or very easily, right? It's pushed up. You might have a bit of a triangle there as well. Okay, so I'm looking for the dollar yen to actually have another leg up towards that 150 level, that 150 resistance, expecting the dollar strength to actually push. You look at that as well. All right, looking for that dollar strength to actually push it up. So what I want to see, and I'm looking at this scenario here that happened the last time round. I want to see this test and then maybe have that big rejection back down again. Okay, that intervention level, I saw a headline. Where was it? I saw a headline earlier today. There you go. Yen wobbles near intervention zone. Right, the yen wobbles near the intervention zone along that 150 level. So what I'm looking out for here is a consolidation, or not consolidation, the triangle that squeeze pop up towards 150. Wouldn't be looking to buy it up. I would in fact be looking for something similar to what we saw here. So a test and reject 149.85, stop loss 30 pips, take profit. You could go a whole 150 to the downside. right? So looking for it to get to that 150 level, ideally hoping that the Bank of Japan comes in and intervenes again, test 150, intervention comes around, pushes it back down. With that, what you would also have is a bit of a double top scenario as well. Okay, so this case, this is a longer term play. It's not something that we're looking out for right now. Or rather, I don't think it's going to happen quickly unless we see the Bank of Japan step in. So 149.85. Stop loss 30, take profit 150. There we go. I would love to see that. Hey Spiros, how are you doing? Right. You could think about it all the way down to 147.30, but I think that with the way it's found this level here over the last couple of, well, early October, I think that that would be a first target. And hey, wouldn't that be nice? One trade, almost comes up, intervenes, order there, straight down 150 pips to the downside. Would you like that? Let me know. Put it into the chat. Put it into the chat. But that's going to take a little bit longer, I think. Then onto the pound dollar. Did not bounce off these levels. Hey, Kalinzi, how are you doing? That one's done. Let's see if you took that. That's the overall move. 61.8. It broke as well, so we'll take that one away. That's not valid anymore. And then if we took this point down to here, you see that it found, even if we took that one there and that one there, it came very close to that 50% level. Right, came to this 50% level and it's pushing back down. Now dollar index is still pushing to the downside. Right, it looks like it's going to come to this point, 106. So this is still pushing to the upside. That's a good resistance. Thank you for that, Ayakami. Kalinzi, better late than never, no worries. There's my resistance there. Break below. You're looking at these levels at 50%. Test, reject. I would say that I would actually stay away from the pound dollar for now. All right, I would stay away from the pound dollar for now just because that dollar strength, right? If we're trading based on this, now dollar weakness, retrace down, might push back up. Ideally, what we're looking at is the pound dollar pushing up. We're looking for that move to happen, right? But if that moves happen, and remember that we're expecting this to push back up, driven by the retail sales number that's later today, right? Later in the session today. So by the time you get into that trade, then very quickly we're looking into tomorrow's CPI data for the UK. So with that, I would actually, and we might see that, so remember looking at this, if that shows a slowdown in inflation growth, we might actually see the pound dollar strengthen a little bit. We might see that break past that resistance. Okay, so what I'm looking at is maybe stay away for the pound yet. You can focus on that tomorrow during the CPI data. What I'm looking out for is possibly for it to climb towards that 1.2280 level and then a reaction at that point. Yeah, okay, I want to do that. So that's what I would do on a pound dollar. I would wait, look for possible reaction at 1.2280. All right, so I'm looking for it to possibly push up, test that level. And also this is because we have UK CPI tomorrow. There we go. Okay, fair enough. You don't always have to jump in. We'll wait for the pound dollar in terms of that setup. Jordan's asking to set a limit order. To set a limit order for that trade on the US yen, we have to set a sell stop order. Yep, that's right, Jordan. And then can you look? Mehdi is asking, can you look at the euro pound instead? Okay, sure. Let me have a look at that. All right, give me a second. We'll look at the euro pound after we look at the euro dollar as well. Okay, I'm just looking at that. I just saw this on my MT4, MT5 as well. Let me just check something. Okay, that's fine. I think it's just going to, it might break out a little bit before pushing back up. I will wait and see what happens to that on the US yen. Because I'm just thinking whether it could break a level and turn down from here. Might not push all the way. You can also look to set a sell limit as well. Yeah, you could also set a sell limit on this. I was just looking and thinking whether, it could go past this point. What we saw the last time round, about 149.30, tight stop, no more than 20 pips, and down that 100. Because of this level here. If it breaks out that triangle and breaks down, that could happen, but I think that it's a little bit unlikely. Let's check something. That 50 is right there. Oops. Yeah, I'm looking at that as the 23.6. So if it breaks down from there, we could see that. I think that it's, in case it doesn't bounce back up, but I think more likely we're looking at that scenario. Okay. Then onto the euro, we had both that option on the euro. If it bounced off 23.6 at the 1.05 or 1.06 level, looking for that buy up. It did not happen, but it did break down from 38.2 to the downside. Right? If you did catch that, let me know. Then what you will also notice here is that it's gone past 61.8, so we can take that one away for now. And then Jordan, I wouldn't. Okay, so one thing, I'll digress a bit. One thing is I wouldn't put in the order now, right? I would want to see it push back up, see the strength of it pushing back up before I would set that order. I'll let you guys know in the Discord channel as well once I get to that point, because what you don't want to do is that, if you see this, using this as an example, price pushing up, and then if you did set the order to sell down right 149.80, you would be caught out and then it bounce back up, right? So I would be looking for the strength of it pushing up before trying to set the orders in. Okay. Dollar index still pushing a bit down. Euro dollar 50% right there, pushing back up. Okay, so we have a previous high here, well, just early this morning, and at 50% level. So now it's pushing back up, could test 61.8. That's my resistance level. What we're looking for here on the euro dollar is a push back up. I don't see why it should push back up that much though. All right, so I think that it's going to come towards that 61.8 level. It's still retracing. This is the part I don't like. Hang on a second. Just let me think a little bit. Right, so it's found that 38.2. So it's found 38.2 and it's bouncing back up above 650. We could see 61.8. What we're looking for now, look at that dollar pushing down, test and bounce. Right, dollar pushing down, test and bounce. So this should push up a little bit before maybe turning back down. I wouldn't be, is that inverted head and shoulder on EU? Yes, good spot. Kalinzi. Very good spot there. So we do have a head and shoulder here or shoulder here. I would say this one. All right, and then that neckline like that, which coincides with this point and that 50% level. So, but see, the thing is that would mean that we're going to see the euro dollar push up, and if the euro dollar pushes up, then we're going to see this drop, the dollar index drop quite a bit, or we should see the dollar index drop quite a bit. What looks like the case is that it might test and reject. So we do have an inverted head and shoulder here on the euro dollar. It does look like it. If it does break above, let's see, that's a 30 pip move. I don't feel like doing that upside on that 30. If we did this 105, 70, 50 pip, to 20 pips. That could work. I think that this will be a scenario where it could push up. It looks like an inverted head and shoulder test and then reject back down. Okay, what you do here in this case is euro dollar. We'll be looking for either a buy at 105.75, stop loss 20 pips, take profit 40, or a reject and then I could sell down. So test, reject, sell down 105.55, stop loss no more than 20 pips, take profit way back down to 60. That's what I would look for on the euro dollar. Yep, okay, I'm happy with that now. So euro dollar, there is okay, so euro dollar, it's on the look for, so retracement complete, sell at 1.0555, stop loss 20, take profit 60, or buy on inverted head and shoulder 105.75, 20 to 40. 1.0575, stop loss 20, take profit 40. There we go. So it's just sitting right there, needs to push up. In fact, you can see it retracing back down now because the dollar index is also retracing back up. Okay, if it doesn't do that, then it's right in the middle. I would say that you can still get into a trade, but it'll be more of a short-term managed trade to the downside. Okay, so I'll focus on this setup on the pound dollar and on the euro dollar. A little bit odd that we come to this point where the pound dollar and the euro dollar seems to be the least. We don't have a setup for it. More like we're waiting for it for price to move before we do get into a setup. Okay. So with that, then so pound dollar, looking at that, might be pushing back down. I would say, in fact, pound dollar, I don't even think you'll get to that. I'll say wait UK CPI tomorrow. So pound dollar is going to sit there. UK CPI tomorrow. Euro dollar could push, has a bit of decision. So euro pound, for Mehdi who's asking, is pushing to the upside, either because of that euro dollar strength or potential, or the pound dollar weakness. We have a high there. If you look at it right across, it does work. Needs to break above to this next point. Euro dollar pushing up. If it breaks above that point, a bit tricky on the euro dollar, pound dollar, and on the euro pound. What I would, if you really had to get into the euro pound, I would say that it needs to break above this level. So 186 8675. Stop loss very tight. I'll keep this very tight because it's breaking a level. 10. Take profit, no more than 30 pips. Or a rejection could see it come back down, but I'm not super, because of what's going to happen, what could happen tomorrow. I'm not super keen on this. Very choppy on the euro pound. So that's what I'll be looking for. Push up because of the euro dollar pushing higher. Pound dollar is tracking down a little bit. So euro pound could push up, break above this resistance, the previous swing high. So 8675, stop loss 10, take profit almost 30 to the upside. Okay, hope I answered your question there, matey. Kalinzi said similar to the euro yen. Euro yen, we caught that straddle to the downside towards that support. Very important support here. Right in the middle of that support and resistance level, I would say that you wait it out to see it. Euro dollar could push this back up. Euro yen is going to be influenced a bit by the US yen, looking like it's pushing up, and the euro dollar looking like it's pushing up as well with that straddle. So I would say euro yen could push up, could do something similar, could do a repeat of what we saw here last week. Look for it to go up, test that resistance and trade back down, staying within that range. Okay. Oh, I saw a question just then. I saw someone ask about the euro pound. Lost it. Okay. Then onto the US Swiss franc. It retraced a lot more than I expected. So I thought it would get to 23.6 before turning back down. It did more than that. It got to 38.2 before turning back down. And it's still at this point. Remember, again, US Swiss franc very dependent or very influenced by the dollar index. So anticipating a push back up, we could see this turn back up. A bit of a higher risk move on the US Swiss franc would be if it breaks above 61.8 is done. We can take that one away. But you see here is a good support level that we see. Right? And you see a double bottom here on the US Swiss franc, pushing back up. A swing level there at 38.2. What you could be looking for, 9040, take profit 50 pips, stop loss 50 pips. I don't like it because it's quite wide, and I don't think you should get in any earlier. 9040. Looks like it's going to sit there instead of tracking down all the way. 9040, first level 50, 50, 60 pips. What I'm trying to say here is that we have one level here, but if we do see that dollar strength come back into play, we could see it push further to the upside. 50% is there, 61.8 is there. Yeah. This is a bit more, okay, what you could, I don't like the aggressive move, okay? So what I would say is that above 91, above 0.91, you can keep it tight at 30 pips, and then I would trade it back up for that 100 to the upside on the US Swiss franc. So break above that previous high, and then we see this move with some hesitation expected in the middle. So US Swiss franc, we would look to buy 0.91, stop loss 30, take profit 100. Stop loss 30, take profit 100 to the upside. Then onto the US CAD, right? US CAD was in that consolidation, did not break down, in fact pushed up because of that dollar strength towards that resistance level. Okay, so 61.8 still holds, take that one away. Right now at 1.3629 or 1.3630. Dollar strength coming back, looking like it might be coming back into play, could push the US CAD up towards that resistance. However, remember that we do have, where is it? We do have Canadian CPI data to be released, which might bring some strength to the Canadian dollar. Dollar strength as well. What I want to see is maybe a rejection of that resistance of 1.37. So 1.3675. Stop loss 25. Take profit back down to 100. So looking for something like that. 1.3675, stop loss 25, take profit 100. Okay, so 1.3675, 1.3675, stop loss 25, take profit 100. Okay. All good so far? Let me know. Put it into the chat. Let me know if it's all good. Makes sense. And if you are finding it useful, do help me out. Click that like, thumbs up button, that little rocket ship button as well. As we head into gold pushing, right? You said there's going to track around there and retrace because of that dollar strength before pushing up. So this was all that rally into the reserve commodity. Okay, we saw a move into reserve currency, we see a move into reserve commodity, all because of what's happening in the conflict area. So now at this point, 1919 needs to break above. All this are all done. We can take all that away. That one is done as well. Gone. Now if we took that move, 23.6 is right there. I don't see this being useful. I would say that the next level is up here at 1947 or almost 1950. Consolidation. So what you see is the same pattern that we see: a push up, consolidate, and then another push up. In fact, I would say that moving it a little bit nearer, above 1924. Yeah, above 1924, I would say that you could see 1950. Yeah. Okay, so break above 1924, 42. 1924, you could see 1950. Could climb to 1950. There we go. Do we enter on breakout or wait for pullback? As usual, I would not just based on a breakout or pullback, but I'll look for a close of the candle. I'll look for the Bollinger Bands as well. I'll look for a few other things, not just the breakout or pullback. Okay, so there, I think this is going to consolidate. It might retrace a little bit, but I'm only looking for the upside on gold. And if you did this as well, no, that doesn't work. Take that away. I'm just trying to see how far, if it could retrace. 38.2 is there, 23.6 is right, it's broken. So 38.2 could hold right at that point. So if it stays above 38.2, which is a 1910 level, we'll see continue upside towards, possibly towards 1950. Okay, it's going to stay around, I think that it's going to stay around this area, but we're looking for a breakout towards that 1950 level. And there we have it. Okay, so that's the plan. Again, remember that tomorrow we will be starting early, 1:30, 1.5 hours earlier, because I do want to cover the currency pairs first, the general analysis first, before we do get into the UK CPI data release at 2 p.m. GMT plus 8. That's where we could be looking at possibly some trades before the news, and definitely some trades during the news, and maybe even slightly after the news as well. Okay, so if you want to find out more about trading during a major news release, do make sure you tune in. I'll see you all tomorrow at 1:30 p.m. GMT plus 8 in preparation for the UK analysis. I watch your YouTube videos of Bollinger Bands, could not understand as well as I do here on live. Can you help me understand on how to enter? We'll do that in the Discord channel there, Kalinzi. Okay. Alrighty. So with that, thank you all so much. Please remember, trade well, trade safe. I'll see you on Discord. If not, I'll see you tomorrow. Take care now.